This morning, the Omicron coronavirus variant sends financial markets into a tailspin. That's our main story. Also today, the Prime Minister announces a major crackdown on internet trolls, good times for retailers, and Australia's best paid CEOs unveiled. It's Monday, the 29th of November 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Then stay listening for Sean's chat with Matthew Drennan from Zurich, Australia, about why people need financial advisors and what he thinks will happen in equity markets. But first, Sean, as I mentioned, global markets have been spooked by the outbreak of a new variant of the coronavirus, with commodities around the world tumbling.
Yes, the futures market suggests the S&P/ASX 200 will fall around 1.5% today, following its 1.6% drop on Friday. It's all because of fears over the Omicron variant, discovered in South Africa and undoubtedly winging its way to other parts of the globe. Over the weekend, the MSCI MSCI All Country World Index benchmark, which measures global share markets, fell 2.2%. Now that's its biggest one-day fall in more than a year. The S&P 500 on Wall Street tumbled 2.3%, while the Euro Stoxx 600, which measures the biggest 600 stocks in Europe, fell 3.7%. Japan's share market finished 3.3% lower on Friday. And Michael, it wasn't just global equities that fell. Commodities were dumped as well. Over the weekend, copper fell 2.5%, nickel was off 3.2%, and aluminium dropped 3.3%. But the biggest fall of all came in oil prices, with Brent crude down 11% to less than $73 a barrel. Along with fears of lower demand, the US last week said it would be releasing an extra 50 million barrels of oil in coming months, adding to supply.
So essentially, markets fall because investors are worried about an economic slowdown. Is that right?
Exactly. If we have another spike in cases and potentially lockdowns and restrictions, then economies will slow. Earnings projections will fall, and so do share prices. That's how it works. Late last week, the fears hit pretty much all parts of the local bourse. The S&P/ASX 200 ended Friday at 7,279 points, its lowest in 6 weeks. Almost 90% of the companies on the ASX 200 on Friday fell. The banks and the big miners tumbled, with both Fortescue and Macquarie Group down more than 3%. Woodside Petroleum fell more than 5%. National Australia Bank, Westpac and Rio Tinto all fell by more than 2%. But fewer sectors have had it tougher than the travel stocks, and they felt it on Friday. Flight Centre was down 7.5%. Corporate travel management was off nearly 6%, and Webjet was off 5%. Qantas fell 5.5%. Its chief executive, Alan Joyce, said the new COVID-19 variant in Africa was of interest, but not yet a serious concern. Mr. Joyce said he expected borders to stay open.
There was a lot of talk over the weekend, but really, how much should we be concerned about this new variant?
Well, alert, but not panicking. That seems to be the message. Many countries, including Australia, have placed travel bans on 9 African countries where the Omicron strain has been detected. Prime Minister Scott Morrison yesterday said there was no change to the national COVID plan at this stage. After he made the comments, 2 visitors from southern Africa who had arrived in New South Wales tested positive for the Omicron variant. Now, media has been reporting over the past 24 hours that doctors who raised the Omicron alarm say the symptoms are unusual, but fortunately mild. The World Health Organization said Omicron has more mutations than Delta and is likely to be more transmissible. But we don't know how effective vaccines will be, nor how severe infections are. We've seen quite a few new variants emerge without making much of an impact. We just don't know, and that's why markets have sold off and people are worried about the economy.
And of course, it's also a big week in economics with the release of the September quarter growth figures as well.
Yes, it is. It's all in the rear vision mirror now, but it's likely the September quarter went backwards by about 2.5%. That's out on Wednesday. What the emergence of the Omicron variant shows, though, is just how tenuous any economic recovery is at the moment.
Yeah, sure does. We'll be back in a moment with the rest of the day's business news. Sean, plenty of stories around this morning. The Prime Minister, Scott Morrison, has announced new legislation that will hold Facebook, Twitter and other social media platforms responsible for harmful content and impose the same legal liabilities as mainstream publishers. Good news.
Yes, well, it is if you're a publisher, maybe not if you're a social media platform. The government says the changes will be some of the strongest in the world and aim to tackle damaging comments from anonymous online trolls. As he put it, Mr. Morrison doesn't want the online world to be a wild west where bots and bigots and trolls and others are anonymously going around harming people. Fair enough. The devil, though, will be in the detail of the legislation, but this is a very big move. The Prime Minister said he'd be lobbying the US for similar legislation. Social media players will be required to have a standardised complaints system that ensures defamatory remarks can be removed and trolls identified. And social media companies will have to disclose details of trolls to victims. This is a big, big change which social media players won't like and traditional media players will love. It will force the social media platforms to introduce a level of accountability that we have not seen yet. And I totally agree. That's a good thing.
Yeah, absolutely. Australia really has a chance to lead the world on this one, and that's pretty exciting. Now, Sean, we talked a lot late last week about the Black Friday sales. It was a massive weekend for shoppers and retailers, with those sales running right through until today. There was also official statistics that show spending was surging well before the weekend.
Yes, that's right. Retail spending rose by nearly 5% during October as restrictions were eased in New South Wales, the ACT and Victoria. The official figures from the Bureau of Statistics were higher than expected and suggest that spending is now back to pre-Delta levels. There were some really big moves. Spending on clothing and footwear, for example, was up nearly 28%. Department store sales rose 22%, which of course reflected the reopening of the shops. Eating out rose more than 12%. Retail spending is now more than 5% higher than a year ago and well above its pre-pandemic trend. Why? Because people built up savings during the pandemic and are paying less for home loans due to low interest rates, so they have cash on hand. Of course, the risk to consumer spending is the supply disruptions to goods production at the moment. That's in terms of manufacturing, accessing raw materials to make the goods, and of course transport, which we've spoken lots about. The November retail sales figures should be even better, because Victoria was fully open during the month. And anecdotally, shops had a great weekend as people took advantage of the Black Friday sales. Now, Michael, I don't know whether you went to the shops over the weekend. I went a couple of times. It was very, very busy.
No, I did plenty of shopping, but every single bit of it was online.
Well done.
Now, ANZ, Sean, is in hot water over how it allegedly sold home loans. What's this one about?
Well, the bank is being sued for alleged breaches of the Credit Act, with the Australian Securities and Investments Commission claiming the bank used cleaners and real estate agents as third-party introducers to sell mortgages. And then the bank allegedly failed to conduct proper checks on information supporting the loans. Sounds incredible, I know, but it's actually a practice that isn't totally unusual in that industry, or at least it wasn't. This time round, it relates to home loans made between 2016 and 2018. ANZ said it's cooperating with ASIC, has established a customer remediation process and has improved its home loan process controls. I hope so. Remember last year, National Australia Bank was fined $15 million after claims it used hairdressers and gym instructors to entice borrowers.
And still on the topic of ANZ, Sean, really interesting decision to keep lending to fossil fuel companies.
Yes, it was. ANZ released its updated climate change lending policy on Friday. As you mentioned, Michael, it will continue to lend to oil and gas companies as long as they have Paris-aligned business plans. So as long as they're doing something to head towards net zero. ANZ is the biggest lender to fossil fuel companies among the four major banks. Previously, boss Shane Elliott said that financing projects to transition from fossil fuels to green energy was necessary as the world shifted to net zero carbon output. He's probably right, but it's a very fine line for investors, that one.
Now, Sean, on Friday, our big story was about Super Saturday, about the record weekend for auctions across the country. How did it go?
Well, solid, but certainly not spectacular. Sydney held 1,577 auctions, according to CoreLogic, and recorded a clearance rate of 71%, which really, Michael, is at the lower end of recent months. Now, bad weather in that city didn't help. Melbourne held nearly 1,900 auctions and recorded a preliminary clearance rate of 68.5%, again at the bottom end of what's been going on all year. Canberra, though, remained really strong with a clearance rate of 88%, while Adelaide was at 79% and Brisbane hit 74%. Undoubtedly, over the weekend, the trend continues. Prices are rising, but by nowhere near as much as they were earlier in the year.
Okay, now, Sean, Gina Reinhardt is, of course, Australia's richest person, and her company, Hancock Prospecting, has announced a casual $7.3 billion profit.
Not bad, is it? It's
That's
more
not
than
bad.
Westpac or ANZ or National Australia Bank, Wesfarmers or Telstra. Record iron ore prices, of course, helped Ms. Reinhardt's businesses record incredible profits. Hancock received a $3.9 billion dividend from its 70% stake in the Roy Hill iron ore mine and also earned $938 million from its iron ore producing business Atlas. Now, there's not too many companies in the country that earned more last financial year. BHP, Rio Tinto and Fortescue did, the big iron ore miners. So too Commonwealth Bank, the biggest company. But Michael, that's about it. She's done very well for herself, Gina Reinhardt.
Yeah, certainly has. And while we're on the topic of earnings, the Financial Review has released its 50 highest paid executives list. As is normal, the boss of Macquarie Group came in number one, but the biggest pay rise went to the boss of Kogan.com.
Yes, that's right. Russell and Kogan's pay jumped $8.4 million to $9 million.
That's a decent pay rise.
It sure is. He's now the country's sixth highest paid chief executive, even though the company barely makes the top 200. And its share price is at a 20-month low right now, including a near 5% drop on Friday. Chair of Kogan, Greg Ritter, said he was delighted Mr. Kogan was paid well because it meant shareholders were being rewarded. Now, Kogan.com's share price went from $5 after the pandemic hit to $25. Since the end of the financial year, it's dropped back to $8. Michael, this one does not pass the pub test.
That's right.
And now, as you mentioned, Michael, Macquarie boss Shamara Wickramanayaka took the title of best paid, earning just under $16 million. Number two was CSL boss Paul Perot. He made $13.9 million. The bosses of Goodman Group, Newcrest Mining and BHP rounded out the top five and all took home more than $10 million. Commonwealth Bank's boss Matt Comyn was the best paid of the bank CEOs, making $6.3 million. That meant he was ranked 15, obviously well below Mr. Kogan's position. And on average, the top 50 CEOs earned $6.2 million in reported pay.
Wow. Okay, Sean, what's making headlines in today's news media?
Well, Michael, the Financial Review is reporting that Australian miners are increasingly optimistic they may be able to resume selling coal to China after official data confirmed small volumes of Australian coal cleared the Asian superpower's borders last month. And the Sydney Morning Herald and The Age, along with 60 Minutes, are reporting that state and federal authorities have evidence that New South Wales' 95,000 poker machines are being used to launder money in the hundreds of millions of dollars range. It includes some pretty incredible footage of a money laundering syndicate operating with impunity in central Sydney. Incredible story, that one.
Running through some of the other stories around today, interest rates are on the rise, with the Commonwealth Bank on Friday lifting fixed-rate mortgages for the third time in 6 weeks. Fixed rates were hiked by up to 0.3 percentage points. Its 3-year fixed mortgage rate is now 2.99%. Earlier this month, Commonwealth Bank conceded that its profitability was being squeezed, and the shift to higher rates should help that.
Former New South Wales Premier Gladys Berejiklian is considering a shift to Canberra, according to media reports. Treasurer Josh Frydenberg on Friday said he'd had conversations with Ms Berejiklian about running for the seat of Warringah in Sydney's Northern Beaches, which is currently held by independent MP Zali Steggall.
Well, there was that survey that you mentioned last week, Sean, that showed just how many people still liked and respected the former Premier, even after all of the ICAC drama. So it may make sense that she pops up again.
I'm sure she will. There was more than 50% of people, despite what's been going on, were big supporters of Gladys Berejiklian. And if you're Scott Morrison looking at the independent Zali Steggall in an area where Ms Berejiklian lives, not surprising they're going for her.
Yeah, absolutely. Now, this one, Sean, ASIC Chair Joe Longo told a parliamentary inquiry on Friday that superannuation fund insiders may have breached directors' duties by switching their own investments ahead of asset revaluations. It gets a little bit technical and isn't typical insider trading, but basically insiders knew that the value of a fund would fall and took actions to benefit themselves as a result. Certainly not a good look. Mr. Longo also said that a cyber attack on the stock exchange is one of the biggest risks facing Australia's financial system.
Yes, Joe Longo, the head of ASIC, has certainly taken a high profile since taking the job. Always worthwhile listening to, Mr. Longo.
Now, what's the key overseas news this morning?
British Prime Minister Boris Johnson has announced new measures designed to contain the spread of the new Omicron variant And the UK's chief health officer warned that the new variant may be able to at least partially evade vaccine protection. It comes as many European and Asian countries consider restrictions, with the Singaporean Prime Minister yesterday saying it might have to reinstitute some restrictions. Remember, Singapore and Australia have a travel bubble together, so we'll have to wait and see how that works out. And also, Michael, the president of the Ukraine said his country's intelligence services have uncovered a Russian-backed plot to stage a coup against his government, as international worries mount that Moscow may be preparing a deeper invasion of the country. No doubt, it's the global hotspot at the moment.
Now, up next, Sean, is the Daily Interview, and today you're talking to Matthew Drennan from Zurich, Australia.
Yes, we were going to talk about equities and what he liked. We got there eventually, but initially we talked all about why financial advice is so important for individuals. And if you're thinking about investing, listen to this interview with Matthew.
Yeah, definitely worth a listen. Also worth a listen is The Week Ahead with our resident economist, Stephen Koukoulas. As you mentioned earlier, Sean, it is a big week for economics.
Yeah, lots going on. We have the September quarter economic growth figures as well as lots of other indicators. Stephen was very excited about the week ahead, no doubt about it.
Yeah, and also while you're there, why not have a listen to Fear and Greed's Sunday edition, which is, I suppose you'd say, a lighter look at business news. Would you agree, Sean?
Yes. Yeah, not a lot of business news, a fair bit of lightness though.
Yeah, indeed. Definitely worth a listen. You'll find all of that in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Monday, the 29th of November, 2021. Make sure you're following the podcast. Join us online on LinkedIn, Twitter and Facebook, and head to fearandgreed.com.au where you can find all of our interviews, all of our shows, and sign up for our free daily newsletter. I'm Michael Thompson, and that was Fear and Greed. Have a great day.